Let's fly to China. The story of Alipay. Alipay is actually the world's biggest fintech platform. Whatever is the biggest in China is the biggest in the world. Alipay is the world's largest, biggest fintech platform. It has 900 million users, a worldwide user base of 1.3 billion people. But what's important is that 700 million people, Chinese people, transact on the Alipay platform every month. That's huge by any standards. They've got 80 million merchants on the Alipay base. When I say 80 million merchants, the way to appreciate what this means is that payments is not just about paying. The opportunities for merchants to collect payment is as important as the user itself. So if you imagine 80 million merchants who are collecting payments through Alipay regularly, that is the huge size of Alipay's platform. Alipay has got international trades in 27 currencies. 45% of Chinese people will use Alipay on daily basis, and Alipay has got 54% market share in China. Alipay was not at the beginning a payment company. It evolved out of Alibaba. Most of us probably know Alibaba, the leading e-commerce company in the world, bigger than Amazon. And it was an attempt to solve a problem, which was in the early days, when I want to do e-commerce, when I pay, I want to be sure that what I will get is what I've ordered for. And if I am a seller, I want to be sure that I will get paid. What Alibaba did in those early days was to create a wallet system in which they warehouse the money of the user, and they will not release it to the seller until the user have confirmed payment and the satisfactory receipt of the goods. So that's how Alipay wallet evolved. But they also recognized that it became an opportunity to do things beyond that in terms of doing broader payments, and therefore recognizing how banks are being worked on both sides. Banks are typically very arrogant. Banks will look at the lower end of the market, they are not very profitable. Very complex, expensive business models. Same thing in Nigeria, same thing in China. Alipay saw the opportunity that, of course, the Chinese banks were likely serving maybe the top 30-40% of the market at the top, and that this smart, intelligent, temporary wallet can be used as general payment, especially when you have a lot of people on Alipay already. They can be using it to pay themselves. That was how the concept of smart wallet evolved independently of what M-Pesa might have done in Kenya. So that was the story. That's the story of Alipay. So after Alipay evolved into payments, it leveraged that origin to move into broader financial services like lending, like mutual funds, cross-border payments, and later also moved beyond financial services into things like entertainment, gaming, ride-hailing, healthcare, and so on. Essentially, Alipay today is what they call a super app. You can virtually do everything on Alipay. Alipay became so huge that when it was going to go into IPO, to the public market in 2022, the valuation potential at entry, the biggest in the world, was $313 billion. That was how huge and successful Alipay was. In fact, it was so successful that the Chinese government became afraid of the success of Alipay, that it was going to be a state within a state. And at the last minute, of course, not helped by the poor emotional intelligence of Jack Ma, when you are successful, you need a little bit of more humility. At the last minute, the Chinese government put a brake on Alipay going to the public market. But that's how successful and big Alipay had become. Alipay, anywhere you go in China, ubiquitous, last mile focused, both for merchants and for payers. Anywhere you go, that's where you see Alipay and digital wallets especially. Smart digital wallets with QR, person-to-person payment, person-to-business, government-to-persons, all of them are being done on Alipay. And what is important is to see that Alipay largely bypassed the success of digital wallets in China, virtually began to make the card, the plastic card, irrelevant. I will talk more a little bit about that because there are interesting lessons to learn. There's another company called Tencent who owns WeChat Pay. WeChat Pay is a messaging platform, very similar to maybe what you guys do in telecoms. And they saw the success, the digital success of how the Alipay digital wallet was taking off. And WeChat followed Alipay into digital payments and started his own smart wallet business. So between the two of them, Alipay and WeChat, they have a duopoly in China. Between the two of them, they have 90% of the digital smart wallet payment in China. And between the two of them, virtually they are replica of each other. They compete, but they virtually replicate each other. Just as Alipay did into broader financial services, both of them also over time extended into banking. Alipay had MyBank, WeChat Pay had WeBank. And the lessons here begins. PayPal from the US saw the success of Alipay and how it was scaling. And he decided to go into China to compete. But PayPal has had very limited success. PayPal has to refocus its business to do cross-border. The nearest contender to the duopoly of Alipay and WeChat Pay is a product called UnionPay. And I will talk about UnionPay very shortly. That near contender has got only 4% market share in terms of smart wallet payment. That is how strong the duopoly of WeChat Pay and Alipay is in China. UnionPay is a very interesting story. UnionPay is actually older than Alipay in the payment market. UnionPay is the Visa card and the MasterCard of China. The same thing, Chinese banks came together in terms of connecting their ATMs and intra-card payments, and they started a payment platform, just as Visa card and MasterCard did in the US. Same principle. So UnionPay started as a card business to connect ATMs among banks and card payment transactions. It was much earlier than Alipay. But you see, card was the initial focus of UnionPay. Card was the way in which UnionPay saw the world. Have we heard of something called marketing myopia? Let me describe it very quickly. Marketing myopia is a classic story in strategy in which companies define their opportunities by what they sell, by their products rather than the need of the customers. The classic example of that from business school, all of you go to Harvard, is the American railroad companies. In the 1920s, the American railroad companies said to themselves that they were in railroad business. They did not say to themselves that they were in transportation business. And the mindset of defining the world, colored by the lens of the internal products, made the American railroad companies to miss the automobile industry opportunity. The American railroad companies had all the technology to go into automobiles, but because they defined their business by their internal products, they missed the automobile opportunity, which became bigger than railroads. Same thing in terms of UnionPay. Because card was his way of seeing the world, when digital wallets was evolving, it missed it. By the time UnionPay woke up to it, the world virtually has moved on. So UnionPay eventually woke up and launched its own digital wallet. But you could see it launched only when Alipay and WeSendPay have virtually dominated the market. And what you see today is that it could only just manage 4% market share. So marketing myopia continues to happen regularly. We used to think it was a classic case in the 1930s. It continues to happen every day. When what you sell colors your view of the world, and you can potentially miss market opportunity. Today, digital wallets are everywhere. Digital wallets as a percentage of total payments in China will be like 60%. Digital wallets are far bigger than card payments today. And for example, in terms of online, digital wallet share of e-commerce transaction in China is 4 times what is done on cards. That's how much UnionPay missed it because its view of the world was colored by its internal products, marketing myopia. Now, interesting lesson. If China is reflecting where the world is going because the most sophisticated digital market is in China, a big question, where UnionPay from a card business has become a minority shareholder in the Chinese market. The big question today is that will MasterCard and Visa card go the way of UnionPay, where their business will be overtaken in the future by digital smart wallets, just as has happened in China. And that explains the aggressive interest that you are seeing between MasterCard and Visa card in your fintech business. They see where the world is going, and they do not want to be left behind by what has happened in China, if China is reflecting where the world is going. So that's the way to understand the aggressive interest of Visa card and MasterCard in African telco fintech business. So 7 key lessons in terms of the China fintech market. Number 1, a prerequisite for success is that there must be a clear market gap, largely a market led by incumbents, which they have not served because of their business model, because they consider the business unprofitable. That is what Alipay has done in terms of scaling digital wallets to where banks were not serving a lot of SMEs, a lot of individuals in China. Number 2 is that market gap, that excluded market opportunity must have the potential to scale with a disruptive technology that can unlock it. Number 3 is that most tech markets, because of increasing return to scale and scope, will move towards consolidation and oligopolies. And you can only best at the end of the day have 2 or 3 big players at scale. If you are number 4 or even a number 3 will struggle to compete. Number 4 is that it is difficult to scale successfully when the market gap has been exploited by scaled business player when you are a challenger. Let me repeat that. It is difficult to scale successfully when you already have scaled players in the market who have exploited the opportunity. It doesn't get helped if the challenger is largely imitating what the early movers have done in the market. I hope I'm communicating. That is the lesson of UnionPay. UnionPay came into the market eventually to challenge Alipay and WeSendChat in digital smart wallet business, but it could only muster 4% market share. PayPal market share does not even show up on the graph. Number 5, the same pattern, find a market gap, build a core there, scale, expand into adjacent opportunities. That is what WeChat Pay and Alipay did. Number 6 is refresh and think every day. I like one of the Amazon.com principles is always day one. And one of the big things in tech, given the dynamic way tech evolves, is to always ask the question, if we start this business today, given what we know of technology and consumer insights? Are we going to do what we are doing now? If the answer is no, then please begin to run, because somebody is coming to eat your cake. Number 7 is the market myopia story. Don't define your opportunities by your internal products. It limits your view of the world. You become a railroad business. You can become a dinosaur. And that's the lesson about Union Pay. The fact that define the world is the card business colored his view of the world, and it missed fundamentally the smart digital wallet payment opportunity.